Ladies and gentlemen, good day and welcome to the Huhtamaki India Limited Q1FY25 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Mishra from ICICI Securities. Thank you and over to you, sir.
Good afternoon, everyone. Thank you for joining on Huhtamaki India Limited Q1FY25 results conference call. We have Huhtamaki India management on the call, represented by Mr. Dhananjay Salunkhe, Managing Director, and Mr. Jagdish Agarwal, Executive Director and CFO. I would like to invite Mr. Dhananjay to initiate with opening remarks, post which we will have a Q&A session. Thank you and over to you, sir.
Thank you. Greetings to everyone and thank you for attending this call. As customary, let me start with our safe harbor statement that the discussions we will have during this call do not represent any forward-looking statements, and it should not have any bearing on future financial performance, including what we are going to discuss about our strategies and operational plans. So coming to the Q1 results. As we have witnessed very challenging and volatile market environment, along with the muted consumer sentiments and urban demand yet to pick up in India. What we have seen is that our Q1 volumes are lower than Q1 sequential quarter as well as year-on-year. However, the margins have been improved considerably on quarter-on-quarter, riding on the better sales mix, which is basically the discussions what we had in previous calls. And due to this better sales mix, in fact, that also has helped us to keep our net sales overall flat as compared to previous year and slightly lower than quarter-on-quarter. The productivity and efficiency push has helped to deliver higher EBITDA quarter-on-quarter as well as year-on-year, and overall there is a improvement in profit before taxes, and overall earning per share has been on an improving trend. As I talked about efficiency measures, these efficiency measures are really going to help us in terms of managing the overall challenging situations what overall economy is going through. To take us through in a detailed financial review, I would request our CFO and Executive Director, Mr. Jagdish Agarwal, to take it over. Over to you, Jagdish, and thank you.
Thank you, Dhananjay. Good afternoon, everyone. With deep appreciation for your trust and support, I am delighted to welcome you to this quarterly investors call. I'll take you through the financial performance of the company for the quarter ended March 2025. As regards the key financial indicators, the volumes are slightly lower on quarter-on-quarter as well as on YoY basis. However, the revenues are almost flat versus both the comparable periods. The top line for the quarter stands at 593 crores, which is almost flat when we look at March 24 quarter. However, slightly lower than December quarter by close to 1%. EBITDA for the quarter stands at rupees 49.7 crores, relatively flat at 49.4 crores of March 2024 quarter. However, this represents an significant increase of 55% compared to December 2024 quarter. December 2024 we had roughly 32 crores of EBITDA. EBIT for the quarter approx 37 crores and again more or less very close to what we had in March 24 quarter, that was 39.8 crores, a slightly decrease compared to March 24. However, comparing with the December 2024 quarter, again it's a significant increase. December 24 we had around 18.2 crores, and in this quarter we had 37.1, despite lower volumes and flat top line. When we look at the finance cost for first quarter, again relatively flat comparing December 24. The reason is that the underlying level of debt remains the same in both the quarters. And surplus cash, whatever surplus cash we have, we are investing it into secured place, either a bank deposits or a mutual funds. And on an average, we are earning more than 7% in that. PBT for the quarter before exceptional items stands at 34 crores, which is relatively flat compared to again Q1 2024 of 35 crores. However, as against Q4 of 2024, this follows the same trajectory as EBIT with significant incremental gains. The PBT for December 24 quarter was 15 crores. Net profit for the quarter stands at 26.1 crores. This again follows the same trend as other profitability indicators. In March 24 we had 26 crores, and in December 24 we have 11.7 crores. Earnings per share for the quarter after exceptional items is stands at 3 to 40 cents per share. Despite some strain on volumes compared to Q1 24 and Q4 of 24, we have successfully maintained both top line performance and margins, which is a promising sign of resilience. This achievement has been driven by a strategic shift toward a more profitable portfolio mix. However, gaining profitable volumes remains a priority, and it will provide a substantial boost to the bottom line and top line. With unwavering confidence in the company's vision and dedicated team, I believe we can overcome current market challenges. We have seen that consumption patterns is very subdued in the market, and we have seen some of the quarter results in the last 2 or 3 days were not so encouraging. Definitely testing times also serve as an opportunity to adopt, to learn, and to emerge stronger. By capitalizing on past insights, refining our approach, and staying focused on sustainable growth, we will navigate this phase successfully and position ourselves for long-term success. Moving on to debt and liquidity position. Liquidity position is in good shape, with the only borrowing on the books being the ECB of rupees 100 crores from its group company. Debt equity ratio is very healthy at 0.1, in line with what we had in December 24 quarter, and debt EBITDA ratio at March at 2.1 compared to 3.2 end of December quarter. Overall liquidity remains strong, and we do have sizable credit lines unutilized, so liquidity is not a challenge. Working capital is relatively flat when we compare with Q1 2024 at an overall level, though even lagging behind when we compare with the December 24 quarter. We are continuously evaluating and implementing measures to ensure the long-term sustainability for our business. Our focus remains on driving programs that support profitable growth, initiatives like enhancing operational efficiencies. At the same time, we are committed to making our workplace safer and better for all employees, as well as associates and partners present on our side. I am pleased to say that we have achieved a significant improvement in our safety metrics this quarter. This progress reflects our dedication to fostering a secure work environment and reinforces our commitment to prioritizing employee well-being alongside business growth. Once again, we reaffirm our commitment to drive sustainable growth, navigating challenges responsibly, and seizing opportunities that position Huhtamaki for long-term success. The value partnership we share with our stakeholders, including our employees, our staff at factories, shareholders, customers, and business associates, is a fundamental to our journey, and we truly cherish this relationship. We sincerely appreciate your continued support and investment in our company. Thank you for your participation and trust in our vision. Okay, that's all. We can go for Q&A about it now.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. A request to all participants, please restrict yourselves to 2 questions. If you have any more questions, kindly rejoin the queue. The first question comes from the line of Deepan Narayan from Trustline Holdings Private Limited. Please go ahead.
Thanks a lot for the opportunity. Good evening, everyone. Firstly, what are the key reasons for this 450 bps kind of increase in gross margin? And do you feel these kind of margins are sustainable over short to medium term?
Okay, I can answer that question, Mr. Narayan. So one is that we have talked about that we are focusing on the right portfolio mix. And if you look at in March 2025 quarter, we had the portfolio mix. When we talk about portfolio mix, it can cover customers, it can talk about product. So overall, it was on the right direction. That is the one. Second, we keep talking about efficiency measures. We are working to improve into all aspects of our cost side, and also, it is a combination of many things. Portfolio, the improvement into operating efficiencies, the cost and all. So it's a cumulative impact.
Okay. And what is the kind of contribution from Bluetooth products during this quarter? And when do we expect these premium products contributing more towards margins, EBITDA margins for our company?
So when you talk about the Bluetooth per se, any product which comes into sustainable category, we call that more Bluetooth. And if you look at, we normally range between 27 to 30, 31, 32% kind of a range. When we talk about very specifically where we have investments into Silvassa, I think we are also making progress on that. But at this point, we talk about the whole basket of all sustainable products putting together.
Okay. And lastly, when do we expect...
Sorry to interrupt, Deepan. Those were 2 questions. I would request you to fall back in the queue for any further questions.
Okay.
Thank you. The next question comes from the line of Rohan from Golden Money Investments. Please go ahead.
Good evening. Good afternoon, sir.
Good afternoon.
The question from my side is, what I am seeing is, there is, I think, much more demand in non-food items, non-FMCG items. So do you think about expanding heavily in non-FMCG items like stationery products and electrical equipment?
Okay. So maybe I can take this. So see, if you see overall our product structure, so we are into essentially food, beverage, and home healthcare and industrial product services. The products which you mentioned, that stationery or the other products, which are basically not really our core focus. So, but yes, in the industrial area, we keep on examining and exploring the better opportunities to service our customers. So, but at this moment, we would be really focusing on the 5 core areas: food, beverage, home, healthcare, and the industrial product sectors.
And the second one, I think in the 2025-2024 annual report, I have seen some loyalty payments towards from the parent company. So, sir, I want to ask how we will keep Huhtamaki India away from the competition.
Sorry, what is your question? What are you talking about? Which payment?
Actually, in the expense section in 2024 annual report, there was an expense related to software expense and loyalty from the parent company, Huhtamaki India. So, sir, my question is how it will create value and keep away from the competition the rest of the market is getting.
Okay, so one thing I can say, Rohan, is that whatever the sprint we do in our company, it goes through a different kind of evaluation process. And there are a lot of initiatives which are going on when we talk about digitalization, or we talk about cyber security, or we talk about software automation and all. So all these are evaluated at a different level, and every transition is what we do at arm's length. So when we talk about first there is no royalty because we are not making any royalty payment. Royalty payment is not there in that, yes. But when we talk about IT, it helps us to get best deals, and all these spend are evaluated and they are genuine.
Yes, sir.
Does that answer your question, Rohan?
Yes. Thank you.
Okay. Thank you. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir, and thank you for the opportunity. Sir, definitely our current results are encouraging with the improvement in margins, and I congratulate the team for the same. Sir, if you could give us some further understanding on the cost efficiency steps which we are taking. I think so the employee cost has been more than 10% of the sales on a consistent basis, on either higher than that. So I think some rationalization earlier we have done in terms of lowering the cost. Sir, if you could give us some color, where are we in terms of the efficiency part? And secondly, sir, if in the packaging segment, if you could give us some more understanding of the clear comparables, whether we are comparable with the likes of the BOPP and BOPET manufacturer, or how differentiation are there between Huhtamaki and them, sir, if you could throw some light on this. Yeah. So maybe I will take this.
Okay.
So you talk about we are talking about the efficiency improvement, and we are examining each and every aspect of our operations. End-to-end operations, not only employee. So overall, there is a project which are going through we call it world-class operations umbrella. We focus on the overall productivity across the organization. Second, of course, the cost control, whatever we do in terms of we buy our products and services from our suppliers, and of course, third internally, the operating expenses. So the efficiency improvement programs are covering all the three areas of our all three are focus areas, I would say. And there were two questions. So can you maybe repeat? I lost one. The last one. So the second part of particular here, even for the first question, I have just a supplement to it. Employee cost as a percentage of sales. How should we take this line item, and what happens in terms of automation or AI technology or the technological benefits, wherein these can be margin accretive if the percentage as a cost to sales is reduced. So what steps are you taking in particular of this line item? And second question was, I was looking at the peer comparison part and also like to understand whether how are these BOPP film manufacturers and BOPET film manufacturers aligned to us in terms of competition, or if you could just give some color. Are they the real comparables for us? Okay. So I think I got it now. So basically, definitely there is an eye on how do we improve the productivity so that percentage of employee cost per sale shall remain better. So that's definitely a objective. And you right mentioned that the focus is definitely going to be on the digitalization, improving our IT infrastructures, and how overall we do business. And that's why if you see Huhtamaki is investing significantly on this embarked on this transformation, and that is why as a overall you would see that there is a slight increase in those expenses, but they are basically going to help Huhtamaki India going forward to really improve the this cost what we have discussed in the past in the first question. Coming to the competitive or the names you mentioned, they are basically only specifically film manufacturers, whereas Huhtamaki not only manufactures our own film in certain areas, complex and where the quality requirements are significantly higher. But we are actually a complex organization. We are into the next activities of printing. So it's not a apple to apple comparison per se.
If I may add, sir, in that case, the margins are our margins comparable to the BOPP film segment? Or basically for this packaging, we are using both BOPET and BOPP films, or if you could just dwell a bit and our margins comparable to these players or not? They should be then higher, since you are mentioning that we are into a complex part of the supply chain.
Absolutely. So we use BOPET, we use BOPPs, and in fact we also use significant part of our product portfolio also includes PE also. And then of course additionally we use aluminum foils. So that's where we end up having a complex structure. So as compared to the only pure play film manufacturers, definitely our margins will be slightly better.
Okay. So I'll join the queue for my two more questions, and I hope moderator will provide me an opportunity.
Thank you, Sanjay.
Shall I ask my question? Yeah. Thank you for that.
Yes, you may rejoin the queue. Thank you. The next question comes from the line of Prithvi Garg from Oak Tree Capital. Please go ahead.
Hello. Hi. Sir, this is in relation to the portfolio mix. So is there any way you could give us some guidance on what's the mix between premium versus non-premium, and are there any disclosures which you plan to do for this going forward? And what is the gross margin difference between the two segments? You can highlight anything on these points.
Okay, I can take this question. Prithvi, when we talk about a portfolio mix, it's not about we are talking about a premium versus non-premium. So portfolio mix is like you have a multiple product categories. You have multiple customers, and also just making sure that what kind of mix you are catching into that, and is it good for a company. And also here we are not differentiating between premium and non-premium, but we are looking at the right product mix and right customer partnership.
Got it. So it basically just helps you, just on a sequential basis, you would try to get the right portfolio mix which gives a better margin or basically sustainability, a better margin sustainability.
Yes. That's the aim.
Okay. Thank you. That was my only question. Thanks.
Thank you. The next question comes from the line of Sukhbir Singh from SMIFS Institutional Equities. Please go ahead.
Good evening, sir, and thank you for the opportunity. My first question is on the export side. Can you please give some light to how the export market is, the export sales is evolving, and we export to more than 70 countries. So can you please provide some guidance regarding it?
Okay. So currently, when we look at the general split between our domestic sales and export sales, typically we are into the range of 70-30, or kind of 1/3, 2/3 kind of a sales ratio we have. And we don't see any risk or we don't see any challenge, and we feel that we continue to maintain our ratios into that range, 70-30 or 1/3, 2/3 kind of that. Anything specific you had to ask?
No, sir. Nothing specific, just a general thing. And so my second question is relating to the capacity utilization. So what would be the capacity utilization overall for Q1?
I think we do have capacity, Sukhbir, and there is a room that we will do more, and we are continuously working on that. But it's very difficult to comment exactly on what percentage, because it depends on product mix as well. What kind of products we are going to have, which products are going to work on which of the machines and all. So there are not many factors, but only if I have to summarize my answer is that we do have our capacity. We can do a little bit more from the same capacity.
Okay, sir. So my question is relating to as we have only.
Sorry to interrupt, Sukhbir. You're done with your two questions. I would request you to fall back into the queue. Thank you.
Yeah, sure. Thank you.
The next question comes from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi. Thanks for the opportunity. So my question is regarding margins. So 4-5 years back, we had much higher margin, and since last 4-5 years, our turnover has also stagnated. We have introduced new technology products like this Blu-ray line. Still, we are not seeing any benefits of this. So are we losing any market share? So what is your comment, sir?
Okay, so Vipul, I can take that question. When you talk about 5 years back or 7 years back, a lot has changed in the last 5 years, 7 years, 8 years. When you look at competitive landscape, there's a big change in that. When you talk about companies, there's a lot of capacity in the market and all. So it's very difficult, we can compare what was the situation 5 years back or 7 years back. But when we look at our situation over the last 1 or 2 years, we are trying to do things which will help us to be sustainable in long term. We are doing things which is going to help us to remain more relevant, more reliable, and more of a sustainable packaging solution partner with our customers. So that's what we are looking into that. And margins are many times is the outcome of many things happening to the market, competitiveness and all. But yes, what is the efficiency measures which we talked in the previous questions and all, we will continuously focus and we are driving to ensure that we remain competitive in the market. When you look at the overall consumption growth, at least last few quarters were not so great. You have seen that rural is doing significantly better than the urban demand and all, but overall consumption scenario is not great. We have seen some results came in last 2 or 3 days. We are talking about the volume growth of 1 or 2%, or not so great. So we believe that the situation probably should improve. The urban demand should come back, and it might take some time, but I think the expectation is that consumption should come back. Hope so.
With the introduction of this innovative technology products, so can we expect the margin to reach up another 100-200 basis point in near future, or it is little far-fetched?
I think it still is too early to talk about that kind of a number. Sometimes it depends on what percentage of the sales and all. So our aim is not that we are just trying to maximize the profit with that. Our aim is that how we do partner with our customers to be a sustainable solution provider. And we are working. Our aim is that how we can push more and more sustainable product for a consumer, and that is good for the overall sustainability point of view. But just putting a number where it is going to improve my margin by 100 basis points and all is too early to comment on that.
Okay, thank you, sir.
Thank you. The next question comes from the line of Rohan from Golden Money Investments. Please go ahead.
Yes. Sir, as you know, our company's target till 2030 is to be 100% sales from the Blue Loop, okay? And sir, government is also taking very tough initiative for plastic recycling and reusing. So sir, do you think that odds are in our favor and we are going to be basically winning this long race?
I think, sorry, Dhananjay, you want to take that question?
Maybe, I can take this, no problem. Yeah, I think your observation is really correct that the Blue Loop is actually the project which is focusing on sustainable products in all 4 areas. And apparently government, not only in India but elsewhere also across the globe, are taking measures to make the products recyclable and specifically packaging, and that definitely shall give us great I would say a benefit going forward. At the same time, some previous questions also were around Blue Loop, whereas we are really having a great products. We are first to the market, and the overall ecosystem is still evolving, and that is the reason where we are having seen some a slower adaptation by our ecosystem to this product. But once that gets going, I think we will be really in a good shape.
Yes, sir. And I want the last question that with 100% Blueloop product sale, we will be adopting with higher margins or the margins will be at same as today? Basically, we will be together with the margins like 10%, 11%.
Sorry, what was the question in terms of margins?
Yes.
No, I mean, it's as Jagdish has already explained the previous question that it's too early to talk about what would be the differential.
But sir, we are the first mover and we have invested a lot in this business. So do you think that we have a high probability of chance to be the best in the business?
Yeah, that's right.
Yes. Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Thank you, sir, once again for the opportunity. Sir, when we look at the commentary from the film manufacturers, especially the BOPET part, they have been experiencing the margins expansion post last June quarter, and they have been emphasizing on the confidence of the demand supply narrowing in from excess to a balanced state. Whereas when we are hearing your commentary or your comments, correct me there, you are not sounding confident in terms of the margins being maintained. So if you could just dwell through the factors of the reasons why are we not confident to post to stay the course in terms of these margins on a sustainable basis. And second point, Dhananjay said that you are almost 2.5 years to this organization, and I hope that some targets you must have set over a period of time in terms of efficiencies or the profitability metrics. So where are you in terms of, if you could just elaborate, because sir, when we investors look at our investment in the listed space of Huhtamaki India, the performance has been very languished in terms of if we look at the stock price performance. The reasons are explained, but what is there for you, stored for your investors? Because we investors are reposing the faith and investing in the listed space, in the equity space, and having this conversation is the medium through which we can express our thoughts and get your views. So if you could just dwell on these two facts, that why is market not giving or the right valuations, and why are our investments not profitable in terms of where is the lacking or the disconnect that is not translating into a sustainable set of profitable numbers for the organization? What levers are still left to be changed that would lead us to a profitable growth path on a sustainable basis? That was my question.
Yeah, so thank you. I think your questions are very large, so I will try to pick up a couple of from them, and maybe we can see if I miss something else. So one, of course, you dwelled upon this BOPET margins or suppliers or film manufacturers. And I think if you see the business model itself is completely different, right? So we have been, as I said, we are a complex organization servicing multiple product ranges and so on. So whereas BOPET is specifically only on a specific focus area. So I think comparison is clearly not fair. So that's what my comment would be on that. Coming to my 2.5 years or close to 3 years in Huhtamaki and how we want to set ourselves forward. So, as we have seen this last 3 years, I think we are able to provide a stability to the organization in terms of leadership, in terms of strategic direction. We have showing the execution excellence for last 2 to 3 years in spite of having really challenging and volatile market conditions. And we want to continue on the path where we have taken the steps forward. So be it where to play and how do we play in specifically attractive spaces. How do we get our global company or global reach and which helps Huhtamaki India and advantages in terms of export market, and then continue to seek help in terms of larger transformation, what we are talking about in digital and IT. So these 3 areas definitely are going to help us continue the path. And there are certain areas where will help us to differentiate further. So, and I think Bluetooth is one of the very important lever we are using. So all in all, if you see last 4 years, yes, 4 to 5 years, various external internal challenges, the sales has remained flat and there is a slight margin erosion, and that is essentially emanated out of the change in the competitive landscape, and the differentiation has now reached. And that's where our effort is at. How do we keep Huhtamaki's differentiation, which was there earlier, and take that back to the previous level. So that's exactly what we are working on in last couple of years, and it's a long journey, and we are confident that we will be succeeding in that.
Right. And for the value creation for your minority shareholders, the wait is long, and neither the market nor there are definitely a disconnect that we investors are not getting the right value, or market is not recognizing that is because of the unpredictable nature of the earnings, which you yourself articulate during the call. So this is the only reason why the investing has not been profitable for your minority shareholders.
So that's a collective effort we are trying to get back and give a consistency. That's what I think I covered.
Okay. And lastly, sir, if you could give us some understanding how the markets are currently shaping up in terms of the competition intensity which you spoke. I think so. You have mentioned earlier in the annual report, also during other calls, that the main customer for us being the MNC, I think so Unilever, has been putting cost controls on all the inputs for them. So how is the landscape currently in terms of our servicing the MNC players and the margin profile which they attribute to us?
I think I have only one word to answer your. This is exactly what challenge. It's extremely challenging at this moment, because as you yourself articulated that our end customers are also having challenges in their own business areas, and that puts pressure on cost, not at every level. So that's a challenge, no doubt.
Thank you, sir, and all the best to the team. That's from my side. Thank you.
Thank you.
The next question comes from the line of Saurabh, an individual investor. Please go ahead.
Hello, sir. Can you hear me?
Yes.
Yeah. So my question is about the annual general meeting. What was the reason for it to be done through video conferencing, not in person?
So one of the key reasons is that we would like that more and more investors will participate, and I think we have seen in the last couple of years this is the best way where we see that more and more investors have opportunity, may not be from same locations, from different city and all. So that's the only one reason that we would like to have this one through digital mode.
So are you saying that the participation when the meeting was held physically versus after COVID, the participation have increased in absolute numbers? Are you saying that?
Yes, we have seen that the people who are attending from different cities also. It's not only that investors are attending from Mumbai.
And going further, this will be the mode that will be preferred.
Sorry?
Going forward in further years, this will be the mode. This will be the preferred mode in that case.
No. So I think the regulations allowed only till this year, and if anything comes separately or new regulations come, that's a different thing. But as for regulations, I think this is the last year so far for digital mode.
All right. My second question is, I heard in your commentary that you are looking for profitable growth now. While after COVID, I believe we were into the mode of letting market share go. So over the past 1.5 years, when the margin had reduced, the management thinking, I think, was to gain market share. And now I heard in the commentary that you are focusing on profitable growth. So I want to understand this change in strategy and what really is the strategy. Is it to gain market share? Is it to seed market share to gain profit? I mean, so it's not clear what is the strategy going to be, just dynamic? What is the strategy really? And is it going to be, one strategy, or is it going to be changing with the times?
Sir, I don't know about which reference you are talking about, but when we talk about, we always maintain one very clear sense that our strategy is to grow the profitable core, and we'll continue to look for opportunities which make sense for us, which will help us to improve both top line and bottom line. And I think that's a clear trend we had across so many quarters, and we'll continue to work on that.
All right, thank you.
Thank you. The next question comes from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, thank you so much for the opportunity. Sir, I wanted to understand.
Madhur, I would request you to be a little louder. Thank you.
Is my audio better right now?
No.
Not quite.
Hello.
Yes, please go ahead. This is right.
Sir, I wanted to understand, sir, when I look at the past 5 years, sir, you mentioned that competitive landscape has changed as well as the product mix has changed. That's why our margins have declined. So, sir, I'm still not clear why, sir, 5 years ago we used to be 11% margin, sir. Although there might be some issues with FMCG in the past 2 years. But the past 4-5 years, sir, I think the packaging industry has grown to a certain extent and we haven't, as well as our margins have declined. So I wanted to understand why and what will it take for us to reach the 10-11% margin going forward?
So I take this. I think instead of discussing specifics, I think the key to go back to that margins is basically drive the innovative and differentiated products. And I think we spoke about Blue Loop, which is a sustainable product portfolio. At this moment, the adaptation is slow because of, as I said, ecosystem is developing, government regulations are still getting kind of established, and then overall development in terms of trialing at the customer and their the cycles, which are basically shelf life studies and all. So it's specifically going in the little slower, but I think that's so how do we really create a differentiated product portfolios which will be accretive going forward. So instead of really brooding over what happened in the past 5 years, I think our focus is basically to go towards that. And then the second aspect will be clearly the competitive. How do we drive our operations as a world-class competitive place where we have we get the productivity and efficiency benefits. So one side we drive the higher accretive product portfolio, other side we become more and more competitive. So that's the overall plan.
Sir, can you give me an understanding about how much products would currently come from these margin accretive products, and with this EPR implementation and this Blue Loop taking traction over the next 3 to 5 years, sir, where do we see percentage of our product coming from those innovative and differentiated products to take our margins to 10-11%?
I'm not sure. I mean, this is like a too specific number. So, Jagdish, you have any response on that?
So, when you talk about API guidelines and all, these are really evolving and all. And there are no specific targets that will go for 100% sustainability kind of regime and all. So, a lot of things are evolving. I don't catch what was the exact you were talking. You talked about API, right?
Yes, sir. So, this Blue Loop and the innovative product that will take our margins to 10-11%. So, I wanted to understand what would be their percentage in our revenue currently and how much we need to scale it up to take our margins to these earlier levels.
So, I will maybe talk about sustainable product sales. We always mentioned that last few quarters we are into the range of somewhere between 27, 30, 31% is there possibly a mix impact. Whether it is going to drive for higher margins, what percentage, what basis points and all, I mean, we have answered in previous questions. It's very difficult. It's very difficult to put a number at this point of time. Again, each product is a different, each customer is a different, each application is a different and all. So, things are evolving and definitely we'll get more clarity and we'll say more in the times to come.
Got it. So this 30% product that 30% revenue share that is coming from these products, so what would be the margin in this product? Would be it in double digit kind of a margin?
It doesn't mean that sustainable is going to have a higher margin. So I'm saying sustainable product and we are not saying that sustainable products are going to have a higher margin than the normal products. There are specific applications and all. So there are not many details, which are a premium categories and all. So just putting a higher margin for a sustainable probably is not a right assumption. There are many complexities when you look into the product structures and all.
Okay, but sir, I'm still not clear, sir, when we say that as the innovative and sustainable differentiated product, whatever we want to call it, as the scale increases, our margin will increase. But we are saying that the margin is similar to what a normal product would be. So how come
that's the idea and that's the intent. And definitely we would like to do something so good which is going to help us improve our margins. And not only on our product side, in fact we talk about a lot of efficiency driving. So from all sides, wherever we think that it's scale for a company to have a better margins, better value creation and all. So it's combinations of sustainable product is one element and there are other elements also. So we are working parallelly and in fact the results what you see in the March quarter, it reflects the efforts put into that direction and all. And if you compare that with the December 24 quarter, there is a big improvement on that. And our aim is that continuously working towards to sustain and improve.
Okay, sir. Thank you so much and all the best.
Yeah, thank you.
A reminder to all participants, you may press star and 1 to ask a question. Participants, please press star and 1 to ask a question. The next question comes from the line of Amit Kumar from Determined Investment. Please go ahead.
Yeah, thank you so much for the opportunity, sir. I'm sorry, I must have missed this. I'm traveling out. I must have missed this during the call. What is the share of Blue Loop / sustainable packaging in your sales mix in this last quarter, and what it would have been in fourth quarter of fiscal 24? If you can just help me.
So the contribution, Amit, yes, we spoke a couple of times in the earlier conversations. It is in the range of 27 to 30%, and more or less similar, the same range we had in December versus more or less very close what we had in March.
So broadly, it has not sort of made progress, during the year. Would you sort of attribute to, the macro challenges, within the FMCG industry, for this lack of progress?
Dhananjay spoke in the previous question, adoption is little slow, and I think it's taking time, but I believe we are on the right trajectory. we are on the right path, and it is going to fall in place. Even the regulators are also, driving towards for usage of more and more sustainable products. So still it is a matter of time, but it is going to, improve on that.
Understood. That's it from my end. Thank you. Just wanted to keep my question.
Thank you. The next question comes from the line of Prabhu Teli from ICICI Bank. Please go ahead.
Yeah. Good evening, everyone. So, my question on the sales side. So, in CY 2022, the sales was around 3,000 crore rupees, which decreased to 2,500 crore in CY 23, which are stable for last 2 years. So, what are the factors which are responsible for deterioration sales or stable? What are the plan of company in future to increase the sales volume and sales revenue?
Prabhu, maybe I just give you one quick view on that. So 2022 was a year of a super inflation. The commodity prices were skyrocketing and all. And, when we talk about the impact that inflation had on our selling prices, so normally if any inflation comes, we do pass it on to our customers. Or generally there will be a lagging impact. So in 2022, one of the reasons that we have very high revenue was that we were super inflation in 2022. So that was one of the reasons. And definitely, like we have said into the earlier conversations, we are focusing to go for a profitable, sustainable growth, and that's our aim and that's our strategy. But especially 2022 was one of the key reasons was the super inflation.
Yes, sir. But the last 2 years, the sales also stable at 2,500 crore rupees. There is no increment.
Right. And if you look at last 1 or 2 years also, there were a lot of challenges on a consumable pattern. And second is that we are focusing to have a right portfolio mix. So 2 regions are also, having some impact on that.
Okay, understood.
Does that answer your question, Prabhu?
Yes.
Thank you. A reminder to all participants, please press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Dhananjay sir for the closing comments.
Yeah, thank you, team, for organizing this call, and thank you, my finance team and Jagdish to prepare for this, and really taking all the questions. And we continue to do these calls as we have started this for last 6 to 8 quarters. So looking forward to keep engaging with investor communities and all the stakeholders. Appreciate your time and interest in Huhtamaki.
Thank you, sir. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference. You may now disconnect your lines. 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 May now disconnect your lines.